Hey, interest rates have dropped. Should you refinance? Well, I'm going to give you the tools you need to answer that question coming up. Hi everyone, Keith Wilson here, helping you to be wise with your money. Now listen, interest rates are at historical lows, and refinancing your mortgage may make sense, but sometimes it doesn't. Why would people want to refinance their mortgage? Well, the first obvious reason is you could get a lower interest rate and thus lowering your monthly payment, which means more money in your pocket each month. That could be used to, spend down debt or just for you to enjoy. Another reason could be that if you had mortgage insurance on your original loan because you didn't have enough for a large down payment, that could go away if you refinance due to your home. Hey, it may have appreciated in value since the date you purchased the home. But here's another reason some people may not think of. If your credit score has increased, it could allow you to apply for a much lower attractive rate. So just because interest rates may have dropped and it could possibly lower your payment, there are a few things you should consider before you refinance. One of the biggest things to consider actually is the costs or fees. Refinancing is not free. The average cost to refinance in the U.S. is over $5,000, according to data from Closing Corp. Now, it's going to vary by state and the value of your home and the lender requirements. So these fees, it's not just one single fee you would pay. There are application fees, appraisal fees, inspector fees, title fees, origination fees, and others. Hey, here's one thing you might want to try before going through this whole process of refinancing, and it's called the rate modification process. So what you do is call your lender, and here's the key. Tell them you've been approached by other lenders with, attractive offers to refinance. But before you wanted to do that, get in touch with your current lender and ask them if they have a rate modification process. Now, this is it's just reducing your mortgage rate outside of a total refinance. Basically, what you're doing is renegotiating the rate. Some lenders, they will do this just to simply keep your business, but it's not free. It may cost you a few $100, but hey, that's cheaper than a few $1,000s. Now, if they won't do this and you need to look into the refinance route, here's what you need to consider. You need to know, what is your break-even threshold? That is, how long will it take to recoup your closing costs? A simple formula for this is take your costs of closing the refinance and divide that by your monthly savings, and that will give you the number of months to break even. If, in this example, you plan on moving in the next 2 or 3 years, hey, it may not make sense to refinance. But if you plan on staying in the home more than 2 or 3 years, absolutely consider the refinance. Another thing to consider is look at how many years are left on your current mortgage. If you have a 30-year mortgage and you only have 12 years left, then consider refinancing for a 12-year mortgage. You see, you don't have to refinance for a 30-year or a 15-year mortgage. That's what most people think of. You can refinance for a 10-year, 11-year, 12-year. In this example, if you have paid in 18 years worth of your mortgage and you refinance to a new 30-year mortgage, then you'll be paying that loan for 48 years. Let me show you an example looking at an amortization schedule. Now, you can get many free downloadable mortgage calculators online. This is one I found from Excel. To get this, you simply open Excel and click New, then search for the free template. It's very accessible. So, if you took out a 30-year mortgage in June of 2002 for $240,000 at an interest rate of 5.25%, your monthly payment would be, according to this Excel spreadsheet, $1,325.29 per month, with a remaining balance as of September 1st, 2020 at $138,521.09. And between September 1st, 2020 until June 2032, the total interest paid on the remaining loan would be $47,628.52. Now, let's look at first refinancing the balance of that $138,000 plus on a new 30-year mortgage. All right, I'm going to use another calculator from bankrate.com. So let's look at this. Let's plug in that $138,521.09. But we're gonna take out a new loan for 30 years and say, I don't know, at 3% that we can get currently. Then when we do that, the monthly payment would only be $584.01. Wow, that's a lot cheaper than the $1,325.29 per month. But remember, now you're taking on a new 30-year mortgage, taking it to September 2050 until it's paid off, and you will have paid over $71,000 in interest during that time period. Much higher if you would have stayed with your current original mortgage. But what if you said, you know what, what I'm going to do is I'm going to refi for that lower interest rate and just make extra payments to equal what I was paying before, which would be an extra, I don't know, $741 plus per month in this example. So let's take a look at that. When we apply the extra payments of $741.28 per month, then that would pay off the mortgage in November 2030 with a total interest payments of $22,235, far less than the $47,000 plus if you would have stayed the course on your current mortgage. However, the danger of doing this is, are you going to be disciplined enough to pay that extra payment each month? If not, it could prolong the loan and increase the interest payments. So let's take a look at one last example. What if we change the amount of the refinance loan of $138,000 plus to 12 years instead of 30? When we do this, your monthly payment, according to bankrate.com, would be $1,146.66 and have the loan paid off in 12 years with a total interest $26,597.83, far less than staying the course of your current loan. So as you can see, look, there are many ways of looking at it. You know, if refinancing makes sense. I will include the links to these mortgage calculators in the description below, for you to decide for yourself. Do the homework If you would like to see more videos like this, be sure to hit that subscribe button below, and I thank you for that. And be wise with your money.